Hi everyone. To start 2023, I made a video recommending 23 top stocks to buy for 2023. In this video, I will update that initial video with how those returns are going for the stocks that I recommended in January and with any updates I might have to that portfolio. And I do have updates that I have changed a few recommendations in that portfolio that you're not going to want to miss. So stay tuned and let's get right into it. So I'm going to go through the list of the stocks that I recommended, and I have pulled up here the total return level since the beginning of the year until this recording on January 31st. And so if you look at the first five stocks, Salesforce, Mercado Libre, Airbnb, Microsoft, and Alphabet, and you look at the returns, Microsoft is the lowest performing of the first group of five, but the rest are all in double digits, including a 37% return in a single month for Mercado Libre stock. This is the often nicknamed Amazon of Latin America that does e-commerce and fintech in Latin America. And this is my first change in recommendation. I'm going to say Mercado Libre stock is up so much already in the first month that I'm going to recommend taking it out of the portfolio now. You've made incredible gains on the stock already. 37% would make me happy for an entire year to earn 37% return on a stock. And so I'm going to take this out of my recommendation. Mercado Libre, I'm not going to recommend it being one of the top 23 stocks to buy anymore for 2023. So that's my first update. And looking across these five stocks, very nice returns in this group of five. Moving on to my second group of five, Chegg, Visa, MasterCard, PayPal, and Palo Alto Networks was the second group of five stocks that I recommended to buy for 2023. Of these, Chegg is the worst returning, losing 16.38%. Of course, if you watched my video that I released a day or two ago, I talked about how OpenAI's ChatGPT is hurting Chegg's prospects longer term, and I have updated this recommendation also, and I'm no longer recommending Chegg stock as a buy. So remove Chegg from this portfolio recommendation. Looking at the rest, we have solid returns as well, with MasterCard at 6.89% and then Palo Alto Networks at 13%. So overall, nice returns here for this group as well. The next group of five includes the Walt Disney Company, Meta Platforms, Nike, Netflix, and Adobe. And we look at all five of these stocks had positive returns, the lowest being 8% for Adobe and Nike, the highest at 24% for the Walt Disney Company. And I don't have any changes for these group of stocks. I still like all five of these stocks here going forward for the rest of 2023, even though they've already given you very nice returns. I feel though there is more room to run, especially looking at the highest return stocks there in the group of Walt Disney, Meta, and Netflix, over near 20%. I feel they've got more room to run here. They've got prospects going forward, catalysts for the rest of the year that could boost their share prices further. The fourth group of five stocks is Etsy, eBay, DocuSign, Home Depot, and Starbucks. And in this group, the only one that did not have a positive gain is the Home Depot, and the highest one was eBay at 17.89%. Overall, very nice returns again at 12.46% for Etsy, 5% for DocuSign. No changes for these group of stocks. I still like these five stocks for the rest of 2023. So continue holding. I continue recommending these stocks as buys for the rest of 2023. And the final three stocks, I've got Target, Domino's, and 3M, with 3M being the only negative returner, losing 6% in the month, Domino's being relatively flat, and Target bringing in a very nice 13.18% return for the month. So there you have it. Those are my 23 stocks to buy in 2023 that I recommended to start the year. And this is how it's gone so far in January. Very healthy returns. Overall, only 3 stocks out of the 23 were negative for the month. But to be fair, the overall market had a nice rally for the month. So it's hard to find any stock in the market that was down for the month. So comparatively speaking, 3 out of 23 down stocks compared to an overall market that was rallying. To put that into perspective, to not make it seem like my recommendation was so much better than the markets overall. And then looking at the changes, I made 2 changes to my portfolio. To my recommendation portfolio, I'm no longer recommending Chegg stock as a buy, and I am no longer including Mercado Libre stock in my top 23 stocks to buy for the year. So those are the 2 changes I'm making. So going forward, if I do an update for March, I will include the returns for the 21 stocks going forward. And if I have any additions or subtractions to the portfolio, I will provide another update in March. All right, so that's all I've got for this video. If you're not already subscribed to my channel, please go ahead and subscribe. I've got deeper, longer analysis on each of these 23 stocks that I mentioned on my channel that goes further into why I like these stocks, why I recommended these stocks in the first place, along with analysis and deeper dives. So go ahead and check those out so you can kind of understand my thinking behind why I'm recommending these as my top 23 stocks for the year. All right, that's all I've got. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.